the question, which is also a bit of a statement, a future strategy for the retirement village sector. What will work for older, more informed resident groups? How will the sector build it? How will it be funded? So I'm just going to kick off with my little bit. And my background is technology, and I see a massive role for technology in this play. But the thing I noticed most of all was when I first entered aged care, which was a long time ago, was how operators behaved like dysfunctional families. And I just thought, what would it be like, if we collaborated more? It's been sort of alluded to and spoken of even in Chris's session this morning that there's a real opportunity, and with technology as the platform driver, to optimise and standardise operational activities and move data, like data logistics, move the right pieces of data to the right places. We have an opportunity to really collaborate and cooperate in a sort of co-opetition type work between RAC and RV as time goes on, because we've all seen the AFR article that there's going to be 60,000 people over 80 in the next 2027, and it's going to sustain that for a few years. So we couldn't possibly build all the RAC beds anyway, and that's an incredible challenge. But so my little bit of innovation and vision is around lots of collaboration and cooperation between RV providers and RAC providers. Cameron? Yep.
Thank you. So, it's a big question, Chris. And
you're a big bloke.
I'm trying to lose weight, mate. Leave it alone. But I think there's two unassailable truths, I think, when we think about the retirement village sector. One is that increasingly residents who move into RVs never want to leave. They want that to be their last move, just like they do when they move to any other accommodation that they want to move in. In the past, that wasn't always possible, and there's still 50% leaving into aged care today. But increasingly, as we're hearing from every other session, is that the expansion of home care into more clinical services, hospital in the home, palliation in the home, full, everything in the home, clinical services, that the ability for them to actually stay in the retirement village until they have to depart and leave through passing away is increasingly more possible. And so these two unassailable truths will intersect. They want to stay there, and they will be able to stay there. Now, the intersection of that truth with the funding mechanism that underpins the whole sector is a real challenge. The average tenure of a retirement village resident has crept up over the last 10 years, from 10, 11 years, from when I first came to the industry, creeping up to 14, 15 years now. The DMF structure is predicated on somebody leaving the village. And if they don't leave the village, then it really puts pressure on the financial model, therefore funding for future growth. So I think there's a customer imperative, for village operators to think about that customer need and that want, and to provide services and mechanisms by which they can access those services. And that may not mean that they do them, although that is my background. It could be that they partner that in, or they work with plenty of other operators that can do them. But I also think increasingly there will be an economic imperative, because if operators are not getting access to that long-tenured funding through that home care and other health services, they'll be out of pocket. It'll be very difficult to fund the growth. It is already very difficult to get funding for expansion in RVs from new investors, simply because investment markets don't understand DMF. So that's why there are no listed operators.
So Cameron, Chris, on our little get-together the other day, had some really innovative, they were innovative to me anyway. I thought around longer-term investment ideas that you've come across, and making the whole thing work with a longer-term return. You were talking about long-term capital in our catch-up that you've observed in Europe. So do you want to just elaborate a little bit on that, on how we can make that work on the property side, and also then, take advantage of the service side?
Yeah, sure. So before I get to that, Baptist Care, we now have about 1,800 independent living units right around the country, about 2,500 residents. An interesting statistic is that more than 75% of those residents have moved into the village within a 15-kilometre radius. So whilst we're a national provider, the game is hyper-local. And we don't see that changing, actually.
That's a good thing.
So know your community. There's an innovative thought. Just know your community, right? There's three things that we focus on just three really simple things. Building strong, connected community, both within the village, but within the community outside the village. And in fact, we're trying not to have walls around villages anymore. We want them to be integrated with the community. Be care ready. Choose your own adventure in what that care looks like for you. Because as we've heard time and time again today, demand is not our problem. Choose the market segment that you want to be in and deliver the care that suits that market segment. And then whatever you do, build trust. The sector continues to suffer a trust deficit in some shape, form or other. So just build trust. Sorry, you asked me what were some of our learnings. We've spent some time overseas looking at a variety of different models. You've asked specifically about funding. The panel before was talking about funding as well. We have a development pipeline that's now over $1 billion. We can't fund that from the balance sheet. So third-party capital was talked about on the prior panel. But the interesting thing when you look into the UK market, not the retirement living sector, but the social and affordable housing sector in the UK is a good 20 years in front of us. And what we're seeing in that sector, which isn't that dissimilar from us in that model in the UK, is access to the long-dated bond market. So 20-year debt at much lower levels than historical banking levels, social infrastructure bonds, and obviously the superannuation, the pension market in the UK, taking much longer dated views, the merging of the social and affordable housing component in the UK being viewed as social infrastructure. And the pension money are very much investing on, again, 20-plus year horizons.
So you're saying that they're miles ahead of us. Can you elaborate a little bit on that? Apart from the capital side, like services?
So when I say a long way in front of us, in this different sector, in the scale of their offering, to be able to tap those sorts of markets, you need to be playing at quite significant scale for that investment community. For them to allocate the dollars, it's not worth them writing a cheque for a couple of $1 million. They want to write cheques for several $100 million. So I think that's why we would say we expect to see continued consolidation in our home market. If you bring that sort of learning to this market, that's one of the reasons why scale will be important if you want to access different funding mechanisms, perhaps from what you've traditionally accessed.
And Sally.
My philosophy?
Yeah, because
Right.
we're smiling because I remember you were like controversial, let's say.
Well, no, I don't think I'm controversial. I think I wear my heart on my sleeve.
Yeah, that's probably...
So I'm extremely passionate about the retirement village industry. Chris used the commentary a lot today about, is it business as usual? For us, absolutely. I'm a passionate supporter of the RV model. I'm absolutely, and our group is not a provider of care into our RVs. Saying that, I have very, very strong views about always creating a care pathway for our residents. And for me, paraphrasing Bev, work to your strengths. Care is not our strength, but we look at partnering with those who have that as a strength as integral to our business. An example at the moment, our new development in Narrabeen, we're putting in a 10-bed care suite. The commercial imperative for us to do so was because, as part of the planning changes several years ago, which have since been rolled back, by the way, if you had some type of rack in your site, you could get 3.8 metres additional height, which translated into a very, very strong commercial reason to do so. What we're going to do with those care suites, absolutely, we have no intention of operating or providing that care for ourselves, but we're looking for very strong partners who specialise in that care provision that will then create an incredible amenity for our residents in our village, and will also open up pathways for other retirement villages to look at that model as well. So that's one, way of doing it. For me, also too, I think Tom nailed, what our thoughts are, which is that prevention is the solution. For us, we do not provide clinical care, but we provide the type of care that I think is as equally, if not more valuable. The type of design and accommodation options that we bring to our residents to allow them to have the best possible health and well-being. The connections that we know are so important can't be underestimated. And if you want my absolute view about what I think is the solution to the challenges that we're dealing with today, it's to build as many more retirement villages as we can. We're talking about funding. The issue isn't the lack of money. A lot of people in the room know that our capital partner is Soul Pattinson, and it was announced in the Financial Times when we did our partnership some 6 years ago that they're ready to invest for us to have 30 villages. And quite frankly, I'd be, delighted, elated if I had that opportunity. But there is no way that I can get the sites and the development permits with the current state regulatory frameworks that can allow me to build those type of villages. There's no issues with demand. We know that. So this has been my challenge, and how I see us dealing with the things that have been brought up this morning, is for us as an industry to come together and fight as hard as we can with our industry leaders, particularly from an RV perspective to our state governments, and do everything we can to change the planning frameworks. Myself and quite a number of the not-for-profits last year, including with Baptist Care and Uniting Spearheading, we fought like tigers at the state government level to be able to address this new low and mid-rise housing policy that has just been introduced, so that we could actually have retirement villages included. And a huge amount of work, resources, time, everything, and it all came to nothing. And the biggest difficulty about it is that yesterday or a couple of days ago it was announced affordable housing is being given all of those additional bonuses. Retirement Village is one of the largest providers of affordable housing. I know because I plagiarise Daniel Gannon's work all the time, so thank you, Daniel. But, so at the end of the day, we provide so much opportunity, so many advantages, and, for me, increasing that penetration from 6% currently at the moment to a significantly higher proportion is the best possible thing we can do to create solutions for our older citizens.
So just a bit more, what
Sure.
do you think about that? I think you were raising duty of care issues around the services part in our conversation earlier. So
actually, what we were talking about was, which caused a huge amount of consternation in the last 10 days or 2 weeks, was when the liquidity pools were announced. And then really what it did was yet one more instance whereby the federal government blurred the distinction between retirement villages and aged care facilities. And it puts a much greater risk burden on retirement villages who are seeking to differentiate themselves as not care providers, as not under the compliance and regulatory arrangements that care providers come under, to be suddenly locked into that type of arrangement does cause a lot of risk. And if we're talking about funding and people who are out there with capital, there is nothing that will cause them to run faster than a far greater increase of risk.
Yeah, and compliance, that goes.
Or compliance and regulatory burden. It's one of the main causes of risk, for sure.
So where do you see that, Cameron? I was just going to...
Yeah, well, what Sally's saying is absolutely right. I think what it may do is attract a different type of fund if it goes that way. I think increasingly, if if customers get what they want and they stay in their villages as long as possible and the services come to them, then retirement villages are increasingly going to be a place where care occurs no matter what. And it's even if, it doesn't matter who delivers that care, and there's going to be plenty of operators, in fact most operators who won't deliver care, and that's completely fine. That's their choice, they don't want to do it. But that's not the same as saying that care won't happen there. And what the lines will get blurred between who has a duty of care when there's a resident in a unit, in a village, that village operator owns, and something happens to that person, the RV, I'm telling you now, the RV operators will get dragged in, absolutely, and increasingly so. And so that we have to figure out as an industry, I think, how to deal with that, because I don't think it's right either. You know, I'm not saying it's a good thing, but it is absolutely a point for advocacy. But there's also an opportunity in that, in a way, that perhaps we can figure out a model that exactly what you're talking about, Sally, is building a built form that is fit for purpose for the residents as they age through that continuum of care and that journey, whether overtly or they self-select. And bringing in the right level of service, compliance, governance, and the people who know how to deliver care really well, and actually bring that in as a service, so that duty of care relationship is really clear and identified up front and managed all the way through and advocated on that basis, then I think that there is a model that can work.
And it's not for everyone, right? And I think, Chris, I paraphrase it as the you do you thing, which you were talking about, do your own adventure, I think was literally what you said. Can you elaborate on that? Because I think there's a lot of intersection here around what, how do you avoid doing some of those things versus going in boots and all and embracing it?
My simple point is that demand outstrips supply. If you go back to the turn of the century, there were 250,000 people aged over 85. It took 20 years for that to double. It then took only 10 years for it to double again, right? We're going to be and then it's only going to take 5 years for it to occur again. We'll be through the 1 million people aged over 85 in the early 30s, right? Wind the clock back. So our people aged over 85, depending on the market segment you play in, you're already starting to see it's not the tsunami, it's not actually the wave. You're getting the wave before the wave is arriving right now. So the point is that people like to write headlines like, different models are going to kill off other models. No. It's a really broad and deep market out there. Just choose the market segment that you want to serve and serve it to the best of your abilities. So for Baptist Care, we're talking about an integrated care village. We're not wanting to play in the lifestyle market. There's plenty of other really good operators out here who can do lifestyle much better than us. Our strength, because we're an integrated aged care player, is to play to the integrated care village space. So that's what we're choosing to do. We're being careful about what that model is and what our promises are in that space, but that's the space that we are choosing to play in because it amplifies our strengths.
Yeah, and I'm a big supporter of that. But I think what's interesting at the 85 plus bubble, it's not the entry point so much that the supplies demand for the RV residents. And what happens on the other end, if there are no aged care beds to move out to, they're not going anywhere, they're staying there. So for people who are worried about managing people through that ageing cycle and not being interested in care, I think it's going to be a tough battle, and one that I think is not going anywhere. And I think there's some underlying issues with the business model.
You've got to balance that out with what Chris is saying around there's room for all the streams.
Yeah, there is, but when you've got a resident in there who won't move out, there is no room. Where do they go?
No, I hear.
So it's not. I don't think it's a bad thing. It's an opportunity, right? It's a good thing in a way. In that, but I think it does require. It's not just that there's a space and there's a model for everybody. There's a circumstance here and an outcome here where
you kind of say
have to deal with someone who requires care while they're in your village all the way through, no matter what.
Pushed into it? Is that
pushed into it? They're going to leave. That's what the customer is not going to leave.
So what's your position on that, Sally? Or is it?
How are you going to kick them out? You can't kick them out.
Respectfully, I probably don't agree with that perspective. My view is that we're very, very clear with all of our residents when they come in, and they're actually very clear with us about what they're looking for, which is independent living. And, we make sure that whatever pathways to care that they're looking for can be provided to them, not as us as the provider, but certainly through our partnerships. I don't subscribe to the view that when a person gets to the point where they can no longer live independently, that myself, the village operator, cannot get them out. We've worked very, very closely with our lawyers, Thompson Gear, and we've worked through a heap of different scenarios where, and have actually been in a situation where, we have even gone down the path of the tribunal and successfully gone down that path where somebody has not been wanting to go out, but it's been demonstrated they can no longer live independently, and we have done so. So I think that, what you're talking about, Cameron, is a very, very subjective perspective where there will always be certain situations where you have to deal with that as it arises. But I think across the board, I don't think there's going to be a tsunami of residents who are going to be digging their heels in and saying, I'm not leaving. I think what's probably more likely is that people will be independent for far longer, and I welcome that. And in fact, many of the things that we're adopting actually go to create that. Focusing on people's connections, their well-beings, giving them the sense of purpose. Strangely, one of the most extraordinary things for people's well-being is actually having pets, and yet still there are 2/3 of retirement villages who have a no-pet policy, which astounds me. There are very, very concrete ways of having people live independently for the longest possible time with the most way of, the highest well-being, but without... but realising that there will come a point when that village is no longer appropriate for their particular point in their life.
Yeah, and I don't disagree. It's just that when it's not a matter of whether residents are digging their heels in and saying I want to stay. It's about there's actually nothing to move to other than perhaps a hospital, and even then there's not enough hospital beds. We've already seen the demographic profile that's coming. There won't be enough aged care beds. Where will they go? There won't be anywhere to go.
I think then the question is, because we talked about this morning, and Tom talked about how the answer is not more hospital beds, but they do go to a hospital bed, and then I myself as the operator cannot take them back into the village because they're no longer independent. And yes, then there is a very, very sad situation, and that is then something for us to deal with within that health system.
I agree. So just wrapping it up, Chris, just 30 seconds for each of you. One challenge, one opportunity. Just one of each.
Oh, look, I think the challenge I've talked about it is the intersection of the health sector and care as it's coming into the retirement sector. It's coming no matter what. The customers are asking for it, and the stark reality of the care profile is demanding it. But I think that creates a great opportunity, and I think the RV sector has got a massive role to play in housing for senior Australians, and doing that in a way that it's appropriate, that is lifestyle-led, that is independent, that is self-determining, and is a great way to be. And I think if it can solve both these problems, then actually the sector gets even bigger and much more beyond the 6% share of the over 65 market it's got today. So I think it's a bright future.
Both the challenge and the opportunity is how we build more product economically. So modular design, how does that design blend agnostically into a broader community? How do you tap sustainability so that the residents' operating costs and us as operators, our costs are lower? We are really lagging this sector actually in the whole sustainability space. How do we become more energy efficient? How do we embed energy networks, all in the interests of lowering costs actually over the longer term? The design to the conversation before, right? So as you get to denser and denser product, how do you refurbish that? So what is your design thinking about now to enable an efficient refurbishment without impact to other residents over time? Somebody else talked about, we're seeing significant underlifting, separability, airflow, sunlight penetration. That's the challenge and the opportunity.
Biggest challenge, creating really, really positive understanding of the advantages that retirement villages can bring to our community. It's just the biggest challenge, because if we succeed in doing that, then we're going to convince our state governments and our federal governments by default to be able to let us build more and to provide this type of housing that makes such a huge difference to these people.
Well, thank you very much, panel, and thank you, Stephen, for leading it. So, Sally, Charles, Pam, thank you very much, everybody.